I've been spending so much time doing SI research, even though I don't own anything about it. But I guess maybe it's my curiosity, being in business, that I'm so keen to find out what's going to happen to SIA. Not that I'm having some national pride about them, but really, what are things that we can learn from a business point of view? I have new findings for you in any case. I'll leave links, very powerful links, to show you new data, new information about SI and where the trend of airline industry is going towards. I'll answer a few key questions, such as why can't SIA just simply raise debt, raise bonds? Why need to do all these rights, MCB? I'll answer that question. I'll also be answering what are the rights, what are the MCB, as well as what's the bond. How is it going to look like moving forward? And if this topic interests you, continue watching on. Hi guys, welcome back. Before we start, quick disclaimer. When it comes to investing in shares, ultimately it's your decision. You have to do your own research. You have to be very comfortable with the company's specific risks before getting involved in it. In that case, look for qualified analysts to give you reports on it. Today is purely a sharing of new information that I've collated for you. Now, let's answer that first question. Why can't SIA just simply borrow money, issue out bonds, save itself once the pandemic is over, return back the bonds? Why is there a need to do rights, MCB, such complicated instruments? Make sense? But that question can be answered with this. Let's look at this summary of the aviation landscape. You realize that Cathay Pacific, circled over here, is looking for a bailout. You realize that Australian airlines are looking for a bailout. You realize that Norwegian airlines are looking for a bailout. Actually, every single airline is looking for a bailout. It's an industry problem, an industry crisis, which means when there's a lot of demand for help, how much help can there be to help everybody? Make sense? Too much demand, too little supply. Very difficult to raise money from there. And that has been echoed in the FAQ. You realize that this is mentioned. It's become very difficult for airlines to tap onto the debt capital markets. This FAQ, I'll leave links below just in case you want to find out a little bit more about it. But they've decided that raising rights using share equity is much better moving forward, even though it impacts overall shares itself. They've also decided to raise on MCB, give them more flexibility. In that case, I have a previous tutorial on the rights on the MCB portion, how it actually works. If you haven't seen that, look for that video over there. That tutorial will really help you. But I want to answer back the question, what is the industry landscape and why can't raising money be done so easily? Why is there a need for bailouts? So let's look at this over here. This is by credit rating agency S&P. They've cut Delta Airline to junk status, BB to BBB minus. Now this is bad news. That's why maybe Warren Buffett has exited the whole airline industry. He has actually sold out from Delta Airlines. Not only Delta Airlines, American Airlines is in trouble. Boeing, who is manufacturing airlines, is in trouble. Everybody in the airline value chain is really struggling, looking for money, looking for help. So when there's again so much help needed, so little money to help them, now it's obviously difficult to just simply go and borrow money. This crisis has also impacted not only Delta Airlines, of course, it's impacted Virgin Australia. Virgin Australia, why is it important for you if you are keen on SI? Because SI actually owns a small portion of Virgin Australia. Let's look at this over here. It's mentioned that S&P has actually cut Virgin Australia from B- to CCC. Now, Virgin Australia is headed by Sir Richard Branson. Will they survive? I don't know, but that guy is pretty charismatic. He's a pretty good businessman. Hopefully he pulls through. I listen to a lot of I read a lot of his books. I listen to a lot of his ideas on businesses. I hope they survive. But in any case, if you are invested into SIA and your concern is on Virgin Australia, I have this to show you over here. SIA Group has no obligation to provide capital to Virgin Australia. They've actually accounted zero in terms of their books for Virgin Australia. That's a very conservative approach. In any case, recently it's been surfacing that new investors are looking to go into Virgin Australia at distressed prices. Hopefully they revive the company so that SIA can account for Virgin Australia with certain equity in it. If not, it's so sad. You write it to zero. It's a total loss of investment. Now let's move on next part where I touch on the rights, the MCB, as well as the bonds, because that is something that may interest you and that has been surfacing a lot in forums. So this next portion is a bit technical, so I may get it wrong. If you pick up something that is wrong, mentioned wrongly, calculated wrongly, leave it in the comment section so that more people can get the right information on it. In that case, let's start. I have this summary to show you. These are the few various tools that you can get exposure to SI. The first one, the orange box, is actually the bonds. I'll cover it to the last section. The second one is actually this purple box, which is actually the MCB portion. That will be covered in the next section. And right now, let's touch on the SIA rights. SIA rights is actually your rights to subscribe to the share itself, which means if you have actually been following on SIA, you do know that once you own the rights, you can actually convert with $3 to the share itself, which also means that the rights should be priced at a difference of $3 to the mother share itself, correct? But what do you realize? The rights now is at 56 cents, and yet the SIA mother share is at $3.70. How does that actually happen? That means the rights plus $3 is actually less than the SIA shares itself. Now, in my understanding, that could be a few factors. One is of which there's a time factor. There's a time factor right now from you exercising this rights to the mother share, and that day is actually 8th of June, which happens a few weeks down the road, which means you exercise it, you can't sell the mother share yet. You only have to wait to 8th of June before you can actually sell off this mother share that you've converted with your rights. But in any case, if you are already a rights owner already, do exercise your rights. If not, you get expired. Do exercise it by 28th of May. Hopefully this video is cut out early enough for you to make the right decisions. How to convert to the mother share itself? These are the various methods. Let's look at it. ATM, online, as well as CDP, share registrar. Now, when I used to own rights for previous company, I had to only do through ATM. This online application, iBanking method is pretty new. So I actually went to check it out, and this is the screenshot. So it's pretty easy. You log to SIA's website. I'll leave links below again. You can actually use PayNow to iBank over to SIA to subscribe for the rights, convert it to the mother share itself, so that after the 8th of June, you can actually sell out from there. So with that understood, let's move on to the MCB, which is also a very interesting proposition of how they actually try to raise money for this survival period. Now in this next part, let's talk about the MCB. And before we get there, let's look at this over here. This purple box is the MCB rights, which means it's listed now at 0.01 cents. If you buy the MCB rights now, you have to pay the money to SIA before it gets converted to the MCB itself. Hopefully that portion you are clear about it. And you do know that the MCB is a hybrid product. At the start, it's a bond, gives you this 4 to 6% in terms of yield. Eventually, it's converted at $4.84. You have to be clear about that. If not, look for tutorials. I'll leave links below for you to understand the MCB first. But assuming you understand, now let's discuss whether the MCB is of good value to you, what to take note of in terms of risk and reward. This question asked by SIS is pretty good. The conversion price of $4.84 after 10 years, how is it calculated? What's the rationale behind it? Now let's look at SIA's response to it. The initial conversion price of $4.84 is considering the prevailing market price, influenced by COVID-19 outbreak, and their underlying objective is to place it at a discount to potential future trading price in 10 years time. Wow, sounds good to you, correct? At the start, you are going to get a yield. Then if indeed the future trading price is above $4.84, you get to convert at a discount. Wow, sounds good, correct? But I want to critically think about it in two different ways. A, the share price in future is actually still low, say $3. What would happen? It means that after 10 years, your bond, whatever it is accumulated, this $1,806.11 per 1,000 is actually converted to shares at $4.84, which means you're buying at a premium. If in future 10 years down the road again, it's $3, you are converting at $4.84. Terrible, correct? Now let's look on the other side of the equation. If in 10 years time, or rather along the way, SIA share price is back to $8, what would happen? Would there really be a great chance that you get converted at a discount? I don't know about it, because looking at the MCB, it is callable every 6 months, which means SIA has the chance to redeem it, pay you back your interest, redeem it, take it back from you. Now you may not actually get that discounted conversion eventually. That's my real concern when looking at this risk reward, because SIA owns the right to convert to call back this bond itself, which means you're kind of in two places. If it doesn't do well, you are at risk of converting at a premium. If SIA actually recovers, COVID-19 is done in 1 year, SIA recovers, wouldn't shareholders put that pressure to buy back this convertible bond? Why is there a need to let future shareholders get a discount? If I'm a shareholder, I'll definitely ask SIA to redeem back this callable bond itself, this MCB. So there's a few key points. In any case, when you are investor into SIA, you should also know that they have the right to issue additional MCB down the road. 6.2 billion of it. They have that planning already. So it really puts the favor, in my opinion, in SIA. They have a lot of control over it. As an investor, I'm not too sure how good a deal it is to you as a retail investor. But in any case, I also want to look what are the alternatives to it. Maybe the SIA bond is a much simpler option. I'll pull up for you to quickly see again. The orange box, this is SIA 3.03% bond. Right now it's trading below par value. This matures in 2024. If you're already interested, you believe SIA will survive, that's great. You want to get some exposure to SIA. Maybe the bond makes some sense, because at the end of the day, bond is just very simple. Mature, pay back your principal, that's it. You get coupon along the way. Much simpler. SIA don't default, you get your coupons. Very simple structure. And I also want to show you this by bonds per month. I want to measure at what price does your bond yield actually yield that 4% that the mandatory convertible bond actually gives at the starting 5 years. That price is about 96.5 cents. And 96.5 cents, you get your yield to maturity about 4%. So that is a kind of way of looking at it. Does the retail bond actually look better value than the MCB? I don't know. Or is it just a simpler investment structure? So that's something for you to consider. There's some findings that I have. Now let's move on to the next section, which we will discuss a bit on what is the latest report from SIA, from their latest release on annual report. Okay, in this section we're going to talk about some new information from the financial year 2020 that was just released by SIA. So look at this pro forma financial effects. This is very important. On this first column, the middle one, net gearing, negative 0.23 times. That tells you that SIA has net cash after this rights and MCB portion done itself. This will tell you if you're a bondholder, very safe, very good news. That means SIA has more cash than its debt. It's likely going to survive. That's good. But if you're an equity investor, let's look at this right hand side column over here. What you realize, they're trying to explain to you after this whole rights and before the MCB is being exercised, on a normal year, the EPS would have fallen to 23.1 cents simply because the equity base is now enlarged. More equity, that's why earnings per share is now reduced to 23.1 cents. If you're investing in SIA today, the shares itself at $3.70, you have to ask yourself whether this P ratio, this is of good value or not. Decide for yourself before you get invested into SIA blindly, hoping that they'll rebound spectacularly. Consider if this is a good enough entry level. I have a subsequent part to also share very interesting information. We all know that SIA actually lost here for 2020. It wasn't surprising to see that, but what really surprised me of what caused this 212 million highlighted in this red box over here is actually this orange box over here, this fuel hedge ineffectiveness. Now I thought SIA actually lost money mainly because of drop in revenue, but it's actually due to this fuel hedging ineffectiveness. And some key things came to my mind, which means the real impact is going to be from 1st April onwards in the new year, the first quarter of 2021. The real impact is going to kick in then. That is really where we're going to see the real losses coming from operation instead of fuel hedging ineffectiveness. How much losses? It's up to anyone's guess because the lockdown period is evolving all the time. But this over here by Cathay Pacific is interesting to know. They've only carried 458 passengers a day in April, which means a fraction of what they used to do previously. SIA or any other airline to that matter is also going to see a significant impact. April, May, and possibly even in June. So these are some key points for you to consider. Hopefully this is interesting topics. In that case, if there's parts mentioned wrongly, do correct me in comment sections below. I'd like to hear your point of view also. And before we end off with what is mentioned by Brian Chesky, CEO of Airbnb, I'd like to again invite you to smash the subscribe button because we're launching videos every week to help you in your financial journey, and smash the like button so that more people can see valuable content like this. So back to Brian Chesky, let's pull this up over here. He mentions that he believes that traveling will be for fun and no longer for work moving forward. This is the CEO of Airbnb. He knows the hospitality industry in and out. If he mentions something like that, we have to pay attention to it. And if that's the case, SIA, as we know, has first class, has business class. If business travelers are going to tone down, that most profitable section may start to erode, may evaporate permanently. We don't know about it. So if the CEO of Airbnb is putting out something pessimistic, it's some points to consider also. So I hope I give you a good perspective, a good rounded perspective. In that case, I'll leave links below for you to follow some of the previous tutorials I've done on SIA. It's a good business case study for me, and I hope it helped you in your financial journey also. So in case, I'll see you in a future video. Take care and goodbye.